Hello, and a massive hello to everybody. How's everybody doing? Hope everybody's having a great Sunday wherever you may be, whatever you may be doing. This is 50 Pips, 25th of September, 2016. No trade calls, no recommendations. Everybody sponsors their own stuff, and we're here for educational purposes only, as usual. So, guys, what's happening? So, keep in mind that we're going into a fairly quiet week in terms of data points. I mean, we do have the IFO out on Monday, but fairly quiet. The big, more interesting will be the week after next, where we'll have basically the FOMC out again, right? But keep in mind that we do have a lot of potential tape bombs with speakers on the wire. Of course, the ongoing issues with crude, but we also have Draghi speaking on Monday. We've got FOMC members speaking. On Tuesday, we have Polos out of the Bank of Canada speaking, and we've got Fisher, another FOMC member, speaking. On Wednesday, we have Yellen testifying. We've got Draghi speaking. We've got Bullard speaking, right? On Thursday, we've got the usual jobs number out of the U.S., but we've got BOJ Kuroda speaking. We've got Forbes, Powell. You know, we got all these FOMC speakers on the wires. And again, it could cause a bit of wheeling and dealing across the board, right? So just keep that in mind. Now, what are the charts that we're focused on, and what are we more interested in? Again, I can't go all through the whole roster here on Sunday. These are just trying to keep these videos tight and to the point. So if I don't mention something particularly, it's because overall the outlook hasn't changed. So again, no big change on the bonds for us. You know, if you can go back and look at the previous videos. Again, something you want to keep in mind is, you know, all this discussion about, you know, government trying to limit banks' commodity trading. That could have a bit of a negative effect on commodities in general. But let's see what happens. So going back to us, what are the things we find the most interesting? Now, gold, number one. As we see gold pressing back here, we see these sellers coming in ahead of the 1350. So our expectation is for gold to try and put in some kind of a top here and see a short-term correction. So we're looking for gold this week to come back down into this ascending trend line, right? Possibly even lower, but at least we think here that, you know, the pot odds in terms of risk return are clearly to the downside going into this week. You know, inside 1350 and 1300, we see a lot of chop. So unless we get a daily close above the 1350 or a daily close below the 1300, we expect to see a lot of choppiness inside this range. But we think this is first one of the interesting charts that we're keeping our eye out of. So S&P, fairly classical action on S&P right at the 2165, right? This is a level we've been discussing. I even tweeted it out. We had a very classic pattern, right? You see intraday on Friday, we said, you know, I tweeted out, if we let go here, don't be surprised to see us try and come back into Thursday low zone. And you see how nice, you know, we couldn't hold above, bam, back below the support, and it's holding. You know, all these overnight ramps, you know, end of day ramps, overnight ramps on low volume chop, you know, the market can give these back before you can blink. So I wouldn't pay too much attention to them. So going back into the chart, you know, we're still stuck. Markets trying to hover, yeah, catching a bid precisely here into this into the 100 DMA ahead of the 2100, and still all these offers capping ahead of the 2200. So right here, it's really difficult to say too much as long as we still close inside 2200 and close inside 2100. Our base case hasn't changed, is that the real pivotal level to look for is what happens around the 2133s, right? And everything else, we're just looking those at usual bull bear lines. And here, the fact that we failed to hold above the 50 DMA, right? And the fact that we're closing back below the 2065 to us would signify that as long as we keep on getting daily closes that are not above this level, that the market is going to try and make its way back into the 2133s. And that's going to remain our pivotal level for the week for a move back into those 2165s or a move back down into the 2100. Now, the way this is reacting, we still expect that both the upside and lower side are getting weaker and weaker on tests. So you could see aggressive breakouts, but still, you know, this is still stuck inside a broader range, and we'll need to see something more significant to still get these things going. But that's the way we're looking at this. And again, we still think that, you know, a healthy correction would be the way to go, even though it can be a sloppy and labored move. Okay. Now, again, in general, I'd keep a close eye on Deutsche Bank. We've discussed in the past, if you're looking at equities, keep an eye on this. It starts to break down. If it gets back below the 10, start to look very heavy. If you're looking at NASDAQ, just keep an eye on Apple, and it'll give you a fairly good steer of what's going on. Again, also going into the week in terms of NASDAQ, you want to keep an eye out on Facebook, and that'll be interesting. Now, the other thing we've been talking about a lot, and as we've discussed in the past a lot, we're not huge fans, and especially because these are outlooks that are, we want to try and look at bigger moves, right? We said there's really not, we're not huge fans of looking at euro here, for example, as long as we're stuck inside this range, because all things being equal, you can make the case for the downside, you can make the case for some kind of upside, but broadly speaking, we're still stuck in some sideways action, right? So here, of course, you can make money or you can lose money intraday, but broadly speaking, you've got a lot of chop around these two moving averages, etc., etc. So there's just not that much to say, right? You can, but really there's not that much to say. So we much rather talk about, bigger moves, things that could be a lot more interesting. So for example, 2 weeks ago, what we discussed was basically this pattern on cable, where we had this breakdown here, false break higher on the weekly, and we said, this could be setting up a decent move for a move back into the bottom side of the channel. That's 300, 400 pip move. So very nice. And again, here with all the news over the weekend on cable, on GPB in general, on Brexit, this could get a little bit ugly, right? But no change in terms of outlook there. So that's why we haven't been talking about euro so much, and we've been talking about Kiwi, right? For us is the next potential big move or interesting move to keep an eye out for. So we've been talking about this monthly a lot. We got a lot of flack before because we're talking about it when it was pretty much into that 100 DMA, right? But we said, this is an interesting pattern. This is an interesting location, right? Price moving back inside. You've got the confluence of these two moving averages coming down. You have the confluence of this bigger fib. Again, this is a monthly chart, high to lows, right? High to lows here, you've got this confluence of the 50 back, you've got these two moving averages. You clearly have the potential for a very nice symmetrical move, right? All the way back down into 47.50s. Again, we don't expect that to happen in 2 days, 3 days, 4 days, or 5 days. But we're just talking about interesting formation and interesting charts. So right here, we've had a very nice reaction off that level. We're about 200 pips down. And it's going to be very interesting if this sets up and closes negative on the month, because we would not be surprised to see a fairly rapid move, all the way back down into the other moving averages, right, coming in towards, pretty much the oops, that's not very tidy. It's not that easy to write with a mouse, into the 68s, right? So fairly nice, and it's still getting some nice moves. And if you look at it on the daily, we discussed about the break here. No point getting stubborn, wait for it to fail at the next level, 75 failure here. And this is a zone we've been looking at for a long time, if people who've been watching these for a while. And we are always highlight the inability of price to get traction and get a daily close above this level, right? Until we got that broader, what now, seems to be a big fake out right above that zone. So going into the week, continue to keep an eye on this, right? As long as price can't close back above this zone, keeps on holding below the 72.70s, starts to take a stab at the 71.70s and closes back below, we think we're on the way here to come back down, try and take a stab at these support zones. And it'd be very nice to see it come back into the confluence of this 200 and this channel here on the daily, which is a more tradable time frame as far as we're concerned. But again, we think this is probably the most interesting chart out there in terms of moves that are currently in play. and after that, what's potentially setting up on the equities. Okay. So guys, I hope everybody has a great rest of the day. Thank you for listening. Don't forget, we've got a really cool webinar coming up on Wednesday. So if you're interested, take a look on the blog. There's a post there. It's a link with a weekly's foundational session. That would be fairly interesting. And again, have an awesome day. Thank you so much for all those likes, for sharing. It's always good to see the content is appreciated. If you have a chart or something you desperately want me to review, send me an email, send me a note on the blog. We'll try and cover it. If not, we'll definitely cover it in the next live session we do one of these Sundays. Okay, have an awesome one. Take care. Thanks again so much. Bye bye, guys.